What a view. Hello, good afternoon, everyone. How are we all doing? We all okay? Yeah? Happy to be in LA? Fantastic. I'm really excited about this next panel. It's all about investing in Bitcoin companies. Funnily enough, one of the reasons you're here today is because someone at some point invested in the Bitcoin company that is Swan Bitcoin, which is why we're having this conference. So clearly they play an important part in the ecosystem. My name is Joe Hall. I'm a reporter, journalist at Cointelegraph. We write about shitcoins, as well as Bitcoin, although I myself am a Bitcoin maxi. I would like to start on the left here. Would you be able to introduce yourself? And could you answer me one quick question? Did you buy Bitcoin first, Mike or Muzz? Or did you invest in a Bitcoin company first in your Bitcoin journey?
Yeah, so I'm Mike with Lightning Ventures. My friends call me Muzz. And I bought Bitcoin way before. So I'm like
way before.
I have a valid Mt. Gox claim, which was far before I ever invested in Bitcoin companies. So yeah, my company is Lightning Ventures. We've invested in many of the companies here, including Swan, and that's pretty much it.
Wow, Mt. Gox claim. Any other Mt. Gox claimers in the house? One.
Yeah, Graham.
Woohoo! But also, I like tears. I'm really sorry for your loss.
Should we be proud of that, though? It's not really something to be proud of, but.
Yeah. Very good. Over to you. Microphone issues.
Is it working? Yes,
yeah.
There we go.
Over to Andy.
I'm Andi Pitt. I'm a partner at Ego Death Capital with Jeff Booth, Nico Lechuga, and working also with Lynn and Preston and Pablo, which is an amazing team. I first bought Bitcoin as well. Yes.
Interesting. Okay. You'll understand why I asked that question a little bit later. So I wanted to get a sense of what the room is like today. I want to get a sense of who has bought Bitcoin before in the past. Yeah? Everybody? Obviously, we didn't actually buy Bitcoin. We lost it all in a boating accident. Who has invested in a Bitcoin company before? Who runs a Bitcoin company? Nice. And who wants to start a Bitcoin company? Nice. Okay. So that's the panel we're working with today. Before we get on to the whether or not we should invest in a Bitcoin company, how do you do it? How do I invest in a Bitcoin company? And is it through dollars or is it through Bitcoin?
So there are a few different ways. You can invest in one of the Bitcoin-only venture capital funds, so like ourselves. There's also syndicates, which are run by amazing people like Mike. And there's obviously going to be kind of different companies that you'll get exposure to by investing in those different profiles. What was the second part of the question?
Dollars or Bitcoin?
Dollars or Bitcoin? Great question.
Or pounds or euros or other fiat-denominated currencies?
So our fund is in US dollars. There's a few reasons for that. One of the main ones is that when we're actually investing in companies, we do invest US dollars or whatever the local currency is, they might convert it. We would love to be on a Bitcoin standard. The reality is that today we don't live in a world where things are denominated in Bitcoin. So from a business management perspective, if your treasury is in Bitcoin, that really exposes you. And we have seen instances of companies this year that had their treasury sitting in Bitcoin. When Bitcoin fell, suddenly they went from an 18-month runway to a 3-month runway. None of the companies in our portfolio. But it's so from a business management perspective, you do have to be careful and just, maybe in a few years' time, it's okay to have your treasury in Bitcoin, but in the meantime, it's still very much fiat denominated.
Why would it be in a few years' time that this volatility you speak of would disappear?
Oh, good question. I think it's more if it materializes that we are able to operate more in Bitcoin, that more things become denominated in Bitcoin. Look, let's see. And whether the volatility changes as well. Like it's obviously one of the biggest challenges in terms of Bitcoin adoption is the volatility. We look at that a lot. For instance, in the last few months, prior to the last couple of days, Bitcoin actually has been very, very stable. The correlation with the S&P actually was massively decreased compared to the prior kind of few months. So it is very interesting to see, but at the moment, I would say the volatility is a kind of barrier to global adoption.
Yeah, we're definitely feeling it at the moment, aren't we?
So how do you invest in Bitcoin companies, right? It's fun. You have a few different options. Number one, you can be an LP. It's a limited partner. Why? Because your input is limited. And that's when you go to experts. You go to experts like her, or Christopher Calicott is coming up here right now. Or these funds, and you become an LP in their fund, right? That's a blind pool of capital, and they invest it on your behalf, right? So if they're only looking at Bitcoin companies, that's all you're going to get exposure to is Bitcoin companies. You can also invest direct, right? If you meet a founder, there's many here, they're investing directly, you can send them a wire and invest yourself in that company, and God bless you. That's the hardest way to do it. Or you can join a syndicate, which is like a group of investors, right? Sometimes it's geographically based, like the New York Angels or the California, Los Angeles tech investors or the Miami Angels, and then they have deals within their group that they kind of pool everyone together in this vehicle to invest in a company, and that's what I primarily focus on.
Wow, very good. I mean, Christopher, welcome to the panel. One of the best panels yet.
Sorry for being fashionably late here. There was a communication breakdown somewhere.
That's okay. To introduce yourself, would you be able to explain who you are and whether you bought Bitcoin before you invested in a Bitcoin company?
Good question. Yeah, Christopher Calicott. I'm co-founder and managing director at Trammell Venture Partners. TVP is an Austin-based venture capital firm. Austin-based, investing globally in startups, purely focused on the Bitcoin protocol stack, the Bitcoin ecosystem. We've been around Bitcoin since the very early days. Dustin, who may or may not be in the audience, right dead center. The Oest of G's in Bitcoin. We did some early investments, 2014, 2015, and what at the time was called the Kraken Bitcoin Exchange. So been around for quite a while. Done things outside of Bitcoin, things like applied AI companies and retail, and obviously looked at a lot of security and privacy deals and things like that along the way. But Bitcoin has always been our North Star. So yeah, to answer the question, we've had exposure for a long time in Bitcoin. It's been our view for a long time now that Bitcoin has already won the battle for the internet's base monetary layer. And over the years, things like SegWit back in 2017, which was a prereq technically for the emergence of Lightning Network. And we've kind of been patiently, quietly waiting for the time to really make some bigger moves to our North Star, which is Bitcoin. And so we started kind of doing the work for what we're doing now back in 2019. And just absolutely sold out on Bitcoin. We think it's super early days and been exposed for a long time. Been buying Bitcoin the last few weeks and kind of accelerated that yesterday. I tried to get a quorum to just hey, let's all buy one coin, like see what happens out at the party last night, but couldn't get a quorum anyway.
Amazing. And well, firstly, the battle for internet's monetary layer has already been won. That's reassuring at a time like this. But which did you buy first, Bitcoin or invest in a Bitcoin company?
We have a very strong view on alignment of interests. To your point about capital formation and things like that, we did something a little unusual for VCs, which when we put together what was actually our second fund, the first Bitcoin TVP Bitcoin Venture Fund, we very graciously, very politely said, hey, we're all on our own journey. You see the opportunity for financial returns, but you don't understand the philosophical underpinnings of Bitcoin and what sound money actually means for humanity. So very graciously, turned away several $1 million for those kinds of investors. So absolutely, Bitcoin, the monetary asset, focus on that. Venture investment is not something that's forever. It's notoriously illiquid, very long-lived asset. And so for a lot of people, it's focus on Bitcoin, the asset. I usually get a question along these lines.
What about you personally? I want to know about you, Christopher. What did you buy first? Bitcoin or invest in a Bitcoin company?
Well, I mean, I don't think it's first. I mean, they're concurrent.
Oh, you did both at the same time?
Sure. Yeah. I mean, GPs, we have capital commitments to the fund and, a lot of alignment of interest. So we invest in Bitcoin companies, we buy the asset. I get a question along these lines. Usually it's like, well, what do you think? Should I buy Bitcoin? Or I don't think that's an either or question. If you're not exposed heavily to Bitcoin, the asset, it's kind of a cart before the horse thing. And they ask, well, why shouldn't I buy more Bitcoin? And then my answer usually is, well, I think you should. Dustin and I and the firm definitely do. So anyway.
Not financial advice, but
if the millions of dollars that he turned away is here, you just call me up and we'll talk about it too.
Amazing. Okay, so I'm hoping that everyone in the audience is familiar with the phrase "stay humble, stack sats." It's not "stay humble, invest in Bitcoin companies." So why should I, as a retail investor, someone interested today, why should I invest in a Bitcoin company rather than just investing in the best money known to mankind?
Andy, you go.
It's definitely a great consideration, and I think, like what Chris said, investing in both is great. We all start in Bitcoin, and then you learn about Bitcoin companies. There's a few different reasons why you might want to invest in Bitcoin companies. Firstly, just the financial returns perspective. A lot of these companies, it's like the early days of the internet is where we're investing. So if you think of the type of returns you would have made of investing in a Google and Amazon and Netflix at the angel stage or the seed stage, that's kind of where we think Bitcoin is at. So if you look at the level of adoption of Bitcoin, it's similar to the internet in the mid-1990s, but the rate at which it's becoming, the speed at which it's being adopted is actually the fastest adopted technology. And so that's super, super exciting just from an outright financial returns perspective. And then, of course, the point is that unless you actually build out the ecosystem, the layer 2, the layer 3, or all of these companies, Bitcoin is not going to become the monetary network that we want it to be. And ultimately, that will actually impact the Bitcoin price, because if you can't use it for anything at some point, the investment thesis around hodling it, around it becoming a store of capital or a store of value actually also shifts. So there's this sort of ideological reason to invest in companies. And then it's just fun. Like, it's amazing. We get to talk, like what Mike said, we get to work with amazing founders. If you're an investor in our fund or in one of the syndicates or an angel, like, it's just so much fun to work with young founders who are excited, who are building, who are really passionate about what they're doing, learn from them, support them. So it's a privilege to get to work in the industry and get to work with a lot of the kind of brilliant founders.
But what's more fun than stacking sats? You don't have to answer that. Muzz, you're looking like you want to answer that.
If we didn't, all of us up here, think that investing in Bitcoin companies was going to outpace the price of Bitcoin, we would not be here. I mean, I'm speaking for myself, and I think we're speaking for everyone. We would not. The investing in Bitcoin companies or early stage technology companies at this point in time, it has to outpace the price of Bitcoin. Okay, these things 10x, 100x, 500x with an early stage awesome Bitcoin startup, okay? And it would take a lot more for Bitcoin to 10x from here, right? They're both gonna happen, right? But quickly, more likely the startup investment in a Bitcoin company is gonna do that much faster. At the same time, you can lose all your money, right? Which you're probably, Bitcoin likely isn't gonna go to zero. And we're in an industry where oftentimes things do. So maybe you have too much Bitcoin, right? Maybe you want to peel a little bit off and you want to diversify.
Not possible.
What do you think?
I think that I want to be clear about what my own personal take is, and that's the price of Bitcoin and global adoption. I think you can make two statements that almost seem to be contradictory with one another. First, the inevitability of Bitcoin on the one hand. I think that it's absolutely inevitable that Bitcoin gets global adoption because the soundest money, the hardest money wins. But the contradictory part of that is, on the other hand, you might say that it's an indeterminate period of time into the future that happens. I think the acceleration, kind of reaching out, lassoing the future, and pulling it a little closer to the present is how I think about the acceleration process through venture capital investment. And I think to Michael's point, over any reasonably long period of time, nothing beats Bitcoin. That's clear. But if you put a time bound on it, if you say, between the Series C or the Series A and maybe an exit or of some sort of acquisition or a late stage round, there are very clear proof points, in the existing broader ecosystem where those startups have outpaced. Look at one of our portfolio companies, Kraken. Competitors like Coinbase and others. I'm not saying these are great examples of Bitcoin companies. I'm just saying that financially they can grow in a faster, compressed time frame. Now, if you ask me, what will be worth more money in 40 years, obviously Bitcoin. So anyway, that's how I think about it.
To put it in context, right? Evil Coinbase, if it was 2013, which Coinbase looked a lot different back then, somebody sent you that seed or Series A round for Coinbase in 2013, and you invested. 8 years later at their IPO, that's a 4,000x return. Okay, 4,000x. Now, granted, that took 8 years, right? But that's a lot of these things, the best ones take a lot of time, and where else are you going to get that type of multiple on your money, right? I mean, it's not like a Wall Street bets thing or a meme stock or some like nonsense scam coin. These are real companies, so if you're looking for those type of returns, this is where you can do that.
Andy.
I think one other point I'd like to add is there's a degree to which investing in Bitcoin companies is uncorrelated with the underlying price of Bitcoin. And this is a point Lynn makes. So if you think about what's going on now, the Bitcoin price has come down so much this year. And let's see, we don't know exactly how long it will be in this bear market. And yet the companies we're investing in, it's to a degree, it doesn't impact them. And so they're building, they're still growing, their valuations are still increasing. And so if you think about it from a portfolio construction perspective, actually having some of the Bitcoin as well as the Bitcoin companies makes a lot of sense of having this more holistic exposure to the Bitcoin ecosystem.
Interesting. I like that because we've touched on the speculation part and now, of course, the altruism as well. There's a lot of sort of doing good for the space and bringing us closer to hyper-Bitcoinization. Now, you've all got a bit of an experience in TradFi. We're building out this new industry, the Bitcoin industry, the Bitcoin space. To what extent are the errors that you see in TradFi repeated in the Bitcoin startup, Bitcoin investment space? Or are we all, enlightened and we're making amazing decisions because of this lower time preference?
Can I go
You're
first?
shaking your head.
Just had this conversation like 100 times in the last couple of months. The human tendency is to take your experience set and then apply it to the new thing. The one most clear, even systemic level risk, as crypto will say, intersects TradFi, is the custody model and rehypothecation of assets. What's happening right now with FTX is a very clear example of taking a debt-based system and then applying it to something that is fundamentally scarce. If I hypothecate my Bitcoin and someone does something very bad with it and it's gone, there's no getting it back. There's no making me whole for that. And that's why we made some early bets around what we believe to be best-in-class custody model where users actually control the majority of their keys using Unchained or their underlying software that's open source with Caravan, where you can coordinate with someone in case someone gets hit by a bus and loses a key. But at the end of the day, you have the majority control. There's no rehypothecation. This is actually absolutely critical, and we keep having an opportunity to learn this lesson, and the lessons are very clearly not being learned. You can't fit the TradFi model into Bitcoin. It just does not work. It's fundamentally new, but what's great is if you think very creatively, this is an entirely new business model and a very new, very long-term relationship-oriented way to engage with your customers and serve them in collaboration with securing these assets in a multi-generational kind of way. And that all starts with the custody and non-rehypothecation of the assets. A little soapboxy, but thank you.
Amazing, Christopher. Do you guys have anything to add there? It almost feels like we're blaming TradFi a little bit for the errors that we're seeing in the Bitcoin space. Is that fair? Or am I looking for a scapegoat?
I mean, from my perspective, when I was at Goldman, we were doing a lot of work financing financial institutions and including rehypothecation of assets on both sides of the financing trades that we were doing. But obviously with Goldman, there was an extremely rigorous risk management culture in place, and that's the type of haircuts we were putting on assets, even AAA rated bonds, risk daily mark to market. In terms of terms, you would be able to call collateral, market however you want, and we just don't see that. So you see young people who are building businesses who don't have any experience, and then they're coming to us saying they're lending at a 30% haircut on Bitcoin, and it's like, yeah, but Bitcoin can drop 30% in a day and then you're underwater. Or people saying, well, we know Bitcoin will go back up, therefore we can lend at lower amount or at a lower haircut. And so people kind of trying to do financial products and lending in such a volatile new space when they don't come from a background of having learnt risk management, and just because they can do it. And I've also spent time, working with the prudential regulator in Australia, looking at bank balance sheets. And there's a reason why within the banking ecosystem, you do actually have very, very strict financial regulation. I mean, a lot of the financial regulation is terrible, don't get me wrong, but there's a reason, because if you can do something, if you can lend out and no one is telling you have to have reserves, you have to have risk management in place, then people get greedy naturally and they just do it, or they just don't think. And so seeing those type regulation is a really difficult question, but I think what we're seeing with FTX, there's going to be more in this space, and that's obviously in crypto more broadly, not necessarily Bitcoin, but as we're thinking about it's let's see what happens.
Okay. We're coming up to the last few minutes here, and I'd love it if everyone could take away something from this panel today. What advice would you give to those working in the Bitcoin space looking to make their first investment, or, for example, looking to start their first Bitcoin company? Mars, I know you've got plenty of experience in this regard with Lightning Ventures.
Well, if you are looking to get started in investing in Bitcoin companies, I would just do as much research as possible and reach out to everyone out there who has a fund and get the lay of the land and really survey everyone that's out there, right? So first, if you kind of know the players and know who's in the space, and start doing some calls and see like who you gel with. If you're a founder, then, get everything together, get yourself incorporated, set some milestones. Don't just like come up with an idea and start calling Bitcoin VCs and asking for money. Do it in a systematic way. And I would get started. I like investing small amounts of money. That's how I started. So syndicates for me was a great way, because you can participate in many different high signal, high quality deals for low amounts of money. You can read those updates from the founders. You can be impactful and participate along the way, however much you can. It doesn't matter what your check size is. And then you learn as you go, right? The amounts can always go up. Okay, the amounts can always go up in the future. Invest in a bunch of different deals and a couple high quality funds, and just learn as much as you can, because it takes years to learn, and probably a lifetime or many lifetimes to learn everything that there is to know here.
Smashing. Christopher, advice?
Always start from a place of research. I think one of the things that is most compelling for investors is when knowing that an entrepreneur is taking massive career risk and opportunity cost to form a company and dedicate. I think that's absolutely the path. But when they say, you know what, we've talked with a lot of people, we did essentially, they might not use this word, but they were doing primary research to validate some fundamental hypotheses that they wanted to test in the market. Find a thought partner, and it might be someone like me or someone on the stage, or an experienced post-exit entrepreneur, and pressure test, spitball ideas with them. I think it's important to understand the framing and to be able to pass muster from a hypothesis. But also keep in mind, when you're talking with investors, they are not your market. Like, we might accidentally be a customer for something that you're building, but don't misread, wow, that sounds interesting, we might be a potential investor for, there is a massive market.
They're in.
Yeah, it's because you are taking a lot of risk. And I think it's the absolute best risk that someone's wired to be an entrepreneur should take in their life. And I don't think there's ever been a better time. Just a couple of years ago, there was about this much professional venture capital for founders that were focused on Bitcoin. So that risk is now gone the way of the dodo bird. So I think do it, but do it from a place of research and hypothesis testing and market validation.
Very good. And finally, Andy, take it home.
One thing I would suggest is really finding the right team. So if you're thinking of starting a business, and think big. So really think like, who are the absolute best people that you could have involved in your team? Who is the absolute like dream co-founder? Think big on your vision. What's your company going to be? Not just like, this is the little thing. Like, what is your huge goal that you could really dream big and be? And that will create motivation, and then you can bring those amazing people on board. And when you have the amazing team as a leader, then you're just kind of creating those amazing people around you and then bringing everyone, and then they're motivated and you're doing it all together. And that's what we really see the most successful CEOs, entrepreneurs, having really, really amazing teams.
Very important advice. Finding a co-founder is, well, actually, one of the major de-risking factors for all founders is your ability to attract and retain top quality talent. And the first job is the co-founder. And when you find someone just crazy enough to get on board with the vision, then that's magic. That's great advice.
Fantastic. Can I get a round of applause, please, for the panel and for Swan for putting this together today? Just to sum up, so Mike from Lightning Ventures, do research and not like your hair, gel. Christopher, hypothesis, market validation, and also you noted the teamwork. And finally, Andy, team up and dream big. Thank you so much, everyone, for taking part and listening in. And enjoy the rest of your day.
Thanks so much. Thank you.